Good evening, TheoTRADE. This is Corey Rosenblum, and you're watching the Theo Nightly Video for an explosive 14th of November in 2023. And that's what we'll start with today's session on last Tuesday. My title had to do with the rally reversal back in the bond market, but also in tech stocks. We'll get to that just in a minute. Right now, we're looking at the Russell Index, which is your small cap, which amazingly is up 5.5% in today's session. And looking at the intraday chart, we had a big gap to the upside, and the market, the Russell, the small cap, went up 96 handles. That's after a gap up. See, those are expected moves. Much, much, much higher than that. We'll talk about why. But if you trade the IWM, that's your ETF, and that's up just as much. Let's get away from the intraday chart and take us right to the daily, and we will start there. Promise we'll get to bonds and tech just in a moment. But the Russell is off that 1650, and this is one of my grand or big theses or discussion points in my sessions and in these evening videos. That the economy is muddling through, just kind of gently walking forward, not veering into the bear side, but not really veering into the bull side. Just a middle muddling through economy. And I think that's best seen through the charts of the Russell, which is your small cap index, and the IWM. Of course, that's your tradable ETF, with the most recent trade being long off this 165, bottom of the trading range, bottom of the distribution, to play back to the middle. Other ETFs have fit that bill. That includes staples, materials, as the one we played here, just off that bottom back to the middle of the distribution. But other ETFs are doing similar plays. Now, again, this is the thought process on the big picture before we start talking about what you see on the screen, which is green, 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 and just a little bit more green. But before we talk about that, the economy is again sideways, as is the market, as is most, or as are most ETFs. Now, that's not true when it comes to the XLK. And that XLK, it is the technology sector. But let us be honest. Is it really the technology sector? Or is it more so Microsoft and Apple? 50% of the XLK, which should be a broad-based ETF, Microsoft, Apple, NVIDIA, Broadcom. What have those stocks done recently? Microsoft, new 52-week high. We'll look at Amazon, new 52-week high. In fact, we can take it back a little beyond that. Amazon shares are up about 75%. Microsoft shares up about, roughly speaking, 66% back to NVIDIA. NVIDIA shares are the big one, 5% of the XLK. NVIDIA, 244%. And Broadcom, which is the number 4 space in that ETF, Broadcom, 84% in 2023. You would be forgiven for thinking that we are in a bull market with nothing but bullishness if you only look at these stocks. And in fact, if you look at the XLK, again, that's your ETF, these are the monsters of tech. Now, we haven't talked about Meta yet, but Meta shares, Facebook shares, up 178%. Again, you'd be forgiven for thinking this is a bull market if your focus was just there. Now, these monsters of tech symbols includes Meta, Apple, Microsoft, Google, and Amazon. Collectively, they're up all together about 82%. That's only about 5 to 6 stocks. But that is important because that is the Nasdaq, and the Nasdaq happens to be those 6 stocks. Nasdaq itself up about 38%. But again, back to the original point and the original trades. We are a little bit more sideways consolidation as opposed to outright bullish. And the Dow mini futures, also the DIA, which is your ETF, would be a little bit better because we don't have those monsters of tech domination. This right here is a much better perspective of where the economy is and the stock market is in 2023 as opposed to this right there. But technology stocks are the leaders. They continue to lead. And in today's session, we had the following stocks make new 52-week highs. And they're some of the big market cap names. Microsoft, Amazon, Meta, Walmart, not a monster of tech, but a good market cap leader. Broadcom, Adobe, Costco, Linde, ServiceNow, and down the list. Some interesting ones would include what we as TheoTRADE call the overpriced burrito. That's Chipotle. We'll come back to that. O'Reilly, Lululemon, and a few others. Ross Stores, again, some earnings in the retail sector. I could dedicate a whole video on the retail sector stocks, but because of the 2% update and the 5% increase in the Russell, that's what tonight's video will be. Don't forget the bond market rallied up as well. So that's the theme or thesis of tonight's video. All things being equal, it's the CPI. But before we had the CPI, we had the tech stocks rallying. Again, right before all this happened, there is the S&P. But the big leadership took place before today's session in some of the key technology names. And in fact, some of those made 52-week highs prior to today's session. And that just shows continued relative strength and leadership in the tech sector. Tech sector. Again, just about 3 or 4 stocks make that up. All the others, we don't talk about those. But nonetheless, most stocks are actually in trading ranges. Not doing this, most sectors are in trading ranges, once again, playing long off support and short or bearishly off resistance. It is down to those 6 stocks, and we do not want to make the mistake of claiming or thinking or believing that the economy is all good because 6 stocks are good. Nonetheless, they are good and getting stronger. But the bond market is getting that push or rally back to the upside, which means here is what we're talking about and why this has all occurred in a nutshell. Inflation, CPI, Consumer Price Index, was expected to gain 0.1%. That's month over month. And it came in just about that, came in flat, unchanged. Now, still have inflation, but that doesn't matter to the market because the Federal Reserve and most traders, many traders, are looking at the direction of those reports. And the direction of inflation reports is down. And that is what the Fed wants to see. And that means the Fed has succeeded, if we keep seeing numbers like today and to the future, in their goal of bringing down inflation by raising the Fed funds rate and other Federal Reserve activities. This is the 10-year Treasury Note yield. And as we've shown other times, these 40 or 50 or 30 are not big round numbers, but they're 5%, 4%, and 3%. And each time the market, this is TNX again, has come into or traded up toward these key levels, again, looking at 2%, 3%, 4%, and now 5%. In the short term, again, we focus on short term in the evening videos here in TheoTRADE, has gone down. And that's no different and no surprise to what's happened in the yield, down from 5%, which has generated, as it has, look at TLT or some of the other products, has generated a sustained rally or bounce off those key levels. TLT does not perfectly correlate, neither does the bond market, which is ZN and ZB, but they are getting a rally, not dissimilar, again, to other points in time where the bond yield rallied or declined from those round number levels. Again, this is the 5% level. That's about the 4% level. Therein is the 3%, and way back over here was about that 2% level and the 10-year Treasury Note yield. And that has sent the bond market higher and the tech stocks, general tech stocks, and the key tech stocks higher as well. We will have PPI. What is the PPI? PPI, let's go here, is the Producer Price Index. Today we had the CPI, Consumer Price Index. That's inflation data, big mover. We don't expect the retail sales and the PPI to be as impactful to the market. We already know what the CPI consumer price, but it will be important to pick up on what the producers are paying or what the inflation numbers are there. So big economic report in retail sales, PPI producer price index. And then if we did not have that big rally, I would certainly be dedicating tonight's video to stocks in the retail sector, which include Home Depot, Target, TJ Maxx, Macy's, Ross Stores, and a few others that do have earnings. So please pay attention to those. There are other stocks, other opportunities, and other trades that are taking place outside of these 6 stocks that make up the monsters of tech, the QQQ, the XLK, and the Nasdaq itself. Far more opportunities outside those stocks than in them. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update, November 14, 2023.